Hello everyone. In this video, we are going to go over some big inflation news that came out this week, the last 2 days, and what that could mean for future Fed meetings. We will look at the indexes and see what we're looking at there. And then stay tuned at the end. We are going to give away a bonus play off of our proprietary trading signal and show you guys how you can take advantage of our 14-day free trial. So make sure you stick around to the end. And please, again, subscribe here, get the alerts. We're putting out amazing content, as well as, we've been putting out educational videos as well here on YouTube. Okay, so what has been happening this week as far as inflation news? Okay, right now I am on Forex Factory here. You can see that up here in my top left corner. And if you go here, you go to the calendar section. And this is really good. We look at this every morning to see what's coming out. Okay, now this was as of yesterday. Okay, you can see that there. Tuesday, I'm recording this Wednesday. We have about 45 minutes till the market closes. And yesterday we had some CPI numbers. Okay, this is a core inflation number along with the PPI that the Fed watches. And you can see yesterday these numbers came in really light. Okay, so they came under what was expected, signaling maybe the inflation, the hot inflation that's been going on for a while may be cooling. Okay, so that was yesterday. And then again today we had that PPI number here, you can see here in the morning, and those came in under forecast. Okay, so in 2 days, we had two really big sets of economic inflation numbers come in lighter, less than expected, which is good for inflation and could be good for the markets. But what could that mean now moving forward? Okay, well, here we are here. And again, you can see here, you can go to cmegroup.com, or you can even Google Fed Watch Tool, CME Fed Watch Tool, and this will come up. Okay, this is what investors and traders are forecasting for Fed rate cuts. Okay, and you can see here, I'm out to the September contract. Okay, and what we're seeing here now, this is as of today, there is over a 50% chance the Fed does nothing. Okay, you can see the current target rate here, 350, 375. So 50% chance now that the Fed's not going to do anything. 2 days ago, before the numbers came out, this was at 20 or 30%. Okay, so this has made a huge move up in a couple days because of those Fed numbers. Okay, and you can see here for a rate hike, this was now at 44%. A couple of days ago, this was close to 70%. Okay, and you can look down here at the current numbers and where they were a day ago and a week ago. Okay, so you can see a week ago, no cut was at 33%, and now we're over 50. Okay, so it is ticking up slightly, but really, in the last couple of days, this has really gone up a lot in favor of a no cut. And that is because of the economics that we just showed you that came out over the last 2 days. Okay, so if you want to check out, follow the rates, the forecasts here, you can go out, far into the contracts and see where things may be lining up. You can just go to CME Group or just Google CME Fed Watch Tool. Okay, so speaking of rates, here's a chart of the 10-year. The 10-year is the most followed product. It's tied to a lot of loans. It's tied to the banks, what the banks lend at. And it's a very, very followed instrument. Okay, and even with those numbers the last 2 days, yes, it has come down. Okay, but it's still in this uptrend. Okay, so we'll have to watch and see how the numbers come out moving forward, what the Fed does in the next couple meetings. But rates are still trending higher. Okay, so It's not like they're crashing. After you would think this would have come down a lot more off of those numbers the last 2 days, but it's still above the moving average, both moving averages. So we got to keep a watch on this because if this continues to go higher, that's going to weigh on the indexes. Okay. All right. So think or swim. Okay. And you can see here, I have the SPY up, and you can see our forecast here. We haven't really put out a forecast since this one here. Let me just zoom in. Okay, you can see our last forecast did hit right there. That was a couple, maybe 2 weeks ago. And why, a couple of reasons why we didn't do a market report last week is we put out some educational videos that you should really check out. That could really help your trading. But also, I have this kind of channel up here or range. Okay, so I really feel like, and we feel here at Delphi, that we're going to chop around for a while. Okay, and it's going to look it could look very similar. Do you see what happened here in the SPY? And this goes for all the indexes. SPY was chopping around in this channel. Okay, we feel like we're in that mode right now. Okay, it chopped around back here, and then it broke out, and now it's chopping around back here. Does that mean it's going to break out again? It could, but until we see a breakout up or down, okay, we feel that we're just going to be chopping sideways. So I'm not going to be putting forecasts every week with a couple point decline or a couple point, going higher. Okay, until we see something material, which could mean closing under the averages right there. Okay, that's the 20-day and 50-day. So if it closes under those, then yeah, we could be headed back down to the bottom of that range. Okay, but for now, not really seeing much. We are in the month of July and August are notorious for being slow. Fund managers go on vacation, but we do feel there could be one more big whoosh lower by October. So when that's going to be, we don't know, but we kind of feel that way here at Delphi. Okay, and Qs, same situation here at the Qs. You can see the Qs was in this long range here for a long time. Then it broke out, and then it moved up, and now is in another range here going sideways. Okay, the Qs actually here are right now under the 20, both moving averages, and under this resistance level. So the Qs could be heading lower here. I'm tempted to make a forecast for next week. Maybe I'll do it anyway, because again, this kind of looks like we close under the averages. We could be heading back to maybe some recent lows down here. So I will put a forecast on the Qs only because it is under the averages. But again, I'm still expecting some chop until there's a move up or down out of this channel. Okay. And then IWM, same thing here in the channel. IWM is between both moving averages, so could even just go sideways here for a while, or up or down. But again, we're seeing a lot of chop here in the indexes. Okay, and as promised, here is our bonus play on Lincoln National LNC. This came off of our proprietary signal we call the Delphi signal. It's an amazing trading tool. And this came up a little while ago. So what we see here is that is a nasty shooting star, okay, right at resistance. Okay, shooting stars at resistance are very powerful, okay? So there is no pivot yet. I'm going to zoom in here a little bit, okay? And what you can see here now that I zoomed in, okay, look at the volumes going down, okay? Volume going down as the stock is going up is bearish, okay? What is that? Why is that? Well, that means that the buyers are losing interest, the buying is drying up, and 80% of the time with a shooting star, that means a reversal is coming, okay? And we have a gap below here, there's a gap below here, two gaps here. If you don't know anything about gap theory, we teach that in our Delphi room, which I'll get to at the end here. But on a pivot, which would mean a lower high and a lower low, which could come tomorrow. I think it's going to head down to at least fill this gap, and it even could head down to this support level where the moving average is going to be waiting. Okay, so for that reason, I'm gonna mimic this angle here. Okay, you'd be surprised how often the angles play out. And I'm just gonna go down to kind of that open gap there. Okay, so on a contingent on a pivot, I do think LNC is going to head lower to at least fill that gap. So we'll keep an eye on this too. Okay. All right. So as we talked about, we have a 14-day free trial going on right now, and we are here in our X page. So please follow us here at Delphi Trading GP, which stands for group at Delphi Trading GP. And we put out a lot of content here, but you can see here, if I scroll up, here is our 14-day free trial. Okay, you can get into our Discord, which I'll show you guys in a minute. No credit card needed, cancel anytime. This gives you access to all of our channels for free. You can come in here, check out what we're doing for trade-wise. You can look at our long-term portfolio, copy it, take some trades. We have crypto in there. We have option flows you can see here. This is why it's important to follow us here on X, because we post some amazing data here. You can see we're posting option flows that came through recently. And we did post our educational video here on candles. Check that out. Very, very important for you guys if you're trading. But again, 14 days, you get in the Delphi trading room. No credit card. You can leave at any time. And again, taking a look at our Discord, okay, you can see all the channels you can get in here. Right now, we're showing the option flow channel. You can see all the option flows that are posted here. But we have a chat. We have, our Delphi signal that we got that free bonus play off of. We post trades in here. We have charts. We got crypto. We have long-term portfolio positions, market indicators, testimonials and stuff like that. So you can get in here for free for 14 days and get access to all these channels, take trades, get amazing information on option flow, all for free. We don't take a credit card, and you can leave whenever you want. Okay, so that's it from us here today. Again, please like, subscribe our X channel, follow X channel, subscribe on the YouTube. You get the alerts. We will continue to be putting out some educational videos there that, trust me, are very, very worth your time to watch if you are a trader. Okay. So that being said, wish you guys all the best. Good luck trading, and we will talk to you next week. Take care.